Listen, if the only thing standing in your way from funding your business is high utilization, then this is the video for you. In this one, I'm going to show you exactly how to lower your credit card utilization even if you don't have the funds at all in as little as 30 days. So go ahead, get your notepad out, sit back, and let's head over to my computer so I can break everything down. All right, we are at my computer, and the topic today is going to be how to fix high credit utilization in under 30 days. And the first thing I want to go over is what doesn't work anymore. Authorized users. This is something that people commonly still think that's a method and a viable method at that. And sometimes they'll buy trade lines hoping to get a 25-30K trade line on their credit profile to bring down their utilization, and that's just not the case anymore. Don't take my word for it. This is straight from FICO. I want to start right here, and it says authorized user accounts aren't considered in the calculation of this attribute. When it says this attribute is talking about credit utilization, it says for FICO high achievers, the average ratio is less than 7%. So you guys know, if you've been watching my channel, I preach having your utilization under 10%, and this is FICO themselves telling you that, hey, the high achievers have 7% or less. All right, so 10% under, you're good to go. 5% and under is very, very optimal. So those are kind of like the numbers in terms of utilization that you want to be shooting for. And I'm sure you guys have seen this pie chart before. This is the FICO scoring model. We're going to be focusing on right here, this 30% category right here, amounts owed. Now, if you're enjoying the video so far, go ahead and smash that like button for me, subscribe to the channel, hit that bell for notifications so you will be notified every time I drop a new video. Now, a lot of times people ask me like, okay, well, I got a utilization problem. My utilization is 40% or 70%. And they're confused. They think, oh, I need to pay down just this one card, or all of my cards need to be under 10% or 15%. Let me break it down for you right now. So this is a very simple breakdown, and this is 3 cards right here. Okay, so the balances on these cards are as follows: $150, $396, and $300. So you have a total balance of $846. This is what's going to be shown as a total balance on your credit profile. So these cards each respectively have a credit limit of $750, $1,200, and $3,000. All right, so total max credit limit of $4,950. And as we see here, all these cards have different utilization. Obviously, 20% for this card, 33% for that card. And card 3, you have 10% utilization. So the goal is not to just get all of these cards under 10%. The goal is this magic number right here, 17%. We want to get this under 10%. So really the method that you want to do when you're, if you're going to just try to pay it down yourself, the method you want to do is attack the smaller cards first. And this is all based on statement close dates as well. That's something you want to make sure you are aware of. When you have a payment due date, that's not the main date. It's the statement close date that you want to actually pay attention to on your credit profile. So you want to literally pay off this $150 balance first. Then you would want to go to this $300 balance, pay that one off next. And then you would want to go to this balance and pay that one off next. Once you do that, then your total credit profile will be able to be down to, 1%, 2%, however it is. And so this is really easy math. If you want to figure out like how to calculate this, all you have to do is add up all your credit limits. So take all these max limits right here, you'd add them up. And so you'll get your total credit limits for all of your credit cards. And then from there, if you want to get down to, let's just say 10%, and you want to get down to 7%, all you do is take this number right here, and then you times it by 0.08 for 8%. If you want to do 10%, you do this number right here times 0.10. That'll give you the balance you need to be at total on your credit profile to be at that 10%, 8%, 5%, whatever that you're trying to get to. So it's, again, really easy math. And the most important thing you want to understand with credit card utilization is you want to make sure that your total credit profile is under 10%, not just each one of these cards individually. Now, I want to talk about another key part of this utilization conversation. All right. A lot of times people just focus on the personal credit and worry about that utilization. But if you already have business funding and you're trying to get more, you need to make sure your business credit utilization is low as well. Now, it doesn't have to be like under 10% like the personal side, but you do need to make sure that that utilization, I would say, is at least under 40%. All right. Because banks do pull business credit as well. Depending on the bank that you're applying to, they could pull any one of these. So we're kind of taking a look at this right now. You got Duns and Brad, you got Experian, you got Equifax, you have FICO, also you have SBFE, which is the Small Business Financial Exchange. All of these are different business credit bureaus, and depending on what type of business credit card that you have, you know, they're going to be reporting on one of these. Some don't report on none, some report on one. Then you have cards like the Chase Inc., you know, that lineup, they will typically report to all of these. So that's something you want to kind of make sure. If you already have business funding, make sure this utilization, you have access to all of these bureaus. You can get something like NAV. We got a link in the description for something like that. NAV is great to kind of monitor all this stuff. Experian, they have their own online account that you can check out as well. But again, you want to make sure your utilization on the business side is under 40% at the very least. The lower, the better, obviously. But that is a key factor to this utilization game as well. So now that I've kind of broke down the utilization and what it means, how to determine it, and all that stuff like that, I want to show you how you can actually bring it down. Okay, so this is for people that maybe you don't have the funds available to bring it down on your own, or you're just looking for a way to still use OPM and leverage other people's money to be able to do this. Now, the best way, in my opinion, to do this is getting a personal loan / installment loan. All right, now this can be dangerous if you don't do it right. So you have to make sure you're really locked in and have a full strategy for this. You can really get yourself in a little bit of a situation if you do this wrong. We're talking about timing issues, a bunch of different things. So, if you're a person that's like super nervous about this stuff, you want to just get our help, go ahead and click the link in the description. You could book a call. We can actually help you build all this stuff out. But, personal / installment loans are the best way to do this. And the reason why is because an installment loan shows up on your credit profile very differently than credit card utilization does. Okay. So when you get an installment loan, it shows up as, an installment, right? So that's not affecting your utilization, okay, which is 30%. That amounts owed section we just went over, that's what that is. So when you take that debt that's on the utilization side and move it to something like an installment loan, it frees up your utilization, which then is going to increase your credit score dramatically. Okay, so this is kind of a way to move the money around to an area of your credit where it's not really affecting you as much. And like I said, it's a great tactic. So I want to give you at least one bank that we always have our clients use, and they tend to give you pretty good interest rates, and that is SoFi. Okay, this is a bank that's kind of been around for a while. They started off as like a fintech company, but they're actually really like a legit bank now, and they are great, right? They specialize in giving installment loans for people that have high credit card utilization, debt consolidation, stuff like that. Okay, you getting an installment loan is going to be a lower interest rate than your credit cards. We're talking about credit cards are typically anywhere from 21 to 30% interest. And you can potentially, even in these high interest rates markets, you can potentially get an installment loan for, let's just say on the very low end, I'd say 8 to 9%. That's if you got really good credit. But if your utilization is kind of bringing you down into like the mid or high sixes, then you'd probably be looking at about like 12, 13 to 15%, somewhere around there. So again, is it ideal? No, but you're not in the ideal situation either. And it's still cheaper than, you just paying interest on these credit cards, which are in most cases double of that. And this is a soft pull. At the making of this video, SoFi does soft pull experience. So that's something that you want to make sure you're aware of, but it's very quick. You can get up to 100K. This is all income dependent. That's another thing as well that you want to make sure you are aware of. So they will do an income verification, I would say more times than not. And all that is just connecting your bank account to Plaid to make sure you make what you say you make. So when you're filling out this application, you want to make sure that you don't lie about your annual income. If you only make $80,000, say you make $80,000, or, if it's, whatever the number is, you want to make sure you're accurate and you can prove that just in case, because a lot of times these type of companies do ask for income verification. So that's something that you want to make sure you're aware of. But again, you can get this, $40,000, $50,000, $70,000 on a installment loan just like this, and use that to bring your utilization down and get in position. Okay. And the goal is you want to kind of time this right to where then you figure out what your statement close dates are and all that, and you pay off your utilization, and then you get in a position where that new account, this installment loan, hasn't shown up yet, and you typically have like a 10-15 day window where the utilization is down and this new account hasn't showed up yet to affect your DTI, and then you're good to go, right? So that is how you can master utilization. This doesn't take long. Any one of these companies, they can fund you in literally, I'd say about 3 to 5 days. They typically say like 24 hours, but it's usually not that quick. But, in most cases, it probably take you like a week to get the funds and then be able to pay down your utilization using a method like this. Now, listen, as I said earlier, this is a lot of stuff. It's a lot of numbers. It's a lot of game planning. It's a lot of strategy based things to not mess this up. If you know you don't want to mess up, right, and you just want to get our help and you're kind of ready to invest in a solution, go ahead and click the link in the description or in the pinned comment. You can go ahead and fill out a quick questionnaire and then book a call to speak with us about working with us one-on-one to actually build all this stuff out for you. And you get access to our network of banking contacts. We build you custom funding strategies, one-on-one help. Like I said, it's really designed for people that want to speed up and fast track this process. Okay. So if that's you, again, you can click the link in the description, book a call. We'd love to speak with you and see about, working with you one-on-one and join our mentorship program. But I hope you guys enjoyed this video. Go ahead and smash that like button if you enjoyed the content today. Subscribe to the channel, hit that bell for notifications so you will be notified every time I drop a new video. And if you want to learn the fastest path to 100K in business funding, go ahead and click the link on the screen right now. It's going to take you to a video I just recently did where I get on my whiteboard. I break down literally the fastest path to 100K in business funding right now. So go ahead and click that video on the screen and I'll see you in that one.